Well, hey, welcome everyone. Chris Barnette here, Business Development Manager at Inspira Financial, and super excited to be bringing you some more educational content today. Happy to bring on my guys from Base Financial. They'll be talking about student housing and how there's a growing opportunity, and they have some really cool things they're doing in that space. Great opportunity to jump in. With the alternative and with potentially using your self-directed IRA, and excited for them to talk about that. But I'll kind of start off just with a few slides. Just if you're not familiar with Inspira Financial, we have quite a few different lines of business, but the one that I represent and that we'll talk about today is the self-directed IRA. And that's just a great vehicle for you to be able to use your retirement funds. So if you have an old 401k or you have an IRA at Schwab, Fidelity, Vanguard, one of those places tied up in the public securities, you can actually liquidate and transfer a portion of that money over to a self-directed IRA. Allows you to invest in some of these private offerings and some of the stuff like you'll hear about today. So just a great way to diversify your portfolio. Just quick disclaimers. So everything you'll hear today is just for educational purposes. So Inspira does not offer any tax, legal, investment advice. It is best, and we encourage you to consult with any attorneys, accountants, financial advisors before entering into any type of investment. Just a little background about Inspira. So we really are that true holistic financial wellness company. So like I said, we do self-directed IRA accounts, obviously, but we also have a health and benefits line, fund custody. We have about 8 million clients across all the different lines of our business. We have 65 billion assets under management, and we've been privately owned for over 20 years. So I like to show this slide because we have that scale and that size, to be able to offer you as the investor some security, expertise, and just some solutions along your investment journey. So what is a self-directed IRA? So really the term self-directed is just a marketing term. So a self-directed IRA is no different than an IRA that you have at Schwab, Fidelity, Vanguard. The difference is what you're able to hold within that IRA. So again, the IRAs at those other public custodians are going to lock you into stocks, bonds, mutual funds, stuff like that. Whereas with a self-directed IRA, you can move that money and invest in private assets, private companies, multifamily, student housing, self-storage, oil and gas. Just a great way to be able to diversify your portfolio and kind of spread and manage your money how you see fit. So that's really in a nutshell what a self-directed IRA is. The rules are exactly the same as any other IRA as far as contribution limits, as far as protection and tax benefits that you get with any other type of IRA. It just allows you to hold different assets. So the different types of IRA accounts that we have here at Inspira, the first two, the traditional IRA and the Roth IRA, are individual accounts. So the traditional IRA is going to be your standard, kind of like your 401k. Those are going to be tax deferred dollars, meaning anything you have in a traditional is going to grow tax free. You get the tax exempt classification up until you get to retirement age and start pulling that money out. That's when you're going to pay taxes whenever you take the money out or take a distribution. That's what we call it. On the flip, the Roth IRA is powerful because if you can take the hit, you pay the taxes up front on a Roth, but then it grows tax-free forever. So whenever you get to retirement age and go to take those distributions out, you get to net 100% of those dollars. You also eliminate what we call required minimum distributions. So once you get to age 73, the IRS actually mandates you to start depleting your traditional tax deferred type dollar accounts. With a Roth, those RMDs go away. So it's a great tool. Not only do you get to net and keep more Roth dollars in retirement, but as estate planning tool as you're looking at, beneficiaries and leaving your legacy, to your wife, kids, loved ones. It's nice to pass on those Roth dollars because you get to keep those dollars and you don't have to deplete your account. The last two, the SEP and the Simple, are going to be the accounts that are tied to your business or employer accounts. So if you have a side hustle or if you have your own business, and you have a SEP or a Simple IRA tied to it, you can actually move those dollars, and we offer self-directed SEP and Simples so that you can operate the same way. If you have some money in those, you can pull that money and invest in some of these private offerings. One of the great things about the SDIRAs, again, is you get to hold a broader array of asset types. So one of the differentiators with Inspira is actually our self-directed IRA is really one of the only ones in the space that will actually allow you to hold both traditional and alternative assets. So what that means is with the same IRA with us, you get the benefits of like that IRA with Schwab, Fidelity, Vanguard. We can offer, stocks, bonds, mutual funds, money market account. So if you have any uninvested cash or some smaller dollar investments, you can invest those, with us into the public securities. But then on the flip, we also allow you to do the alternative, the private equity and debt, the real estate, hedge funds, even crypto. I know my buddy Terrell, who's going to be coming on, is the crypto guy, and we allow the crypto as well. So really, we pride ourselves on being able to do everything under one roof, all within the same account. So you're not having to transfer money back and forth. Hey, man, I want to do some public stuff, or I want to do private. I need to know where I need to have my money. Inspira is the financial institution that can do everything under one roof. So really want to touch on that because it's a differentiator for us and something we really lean on. The benefits of investing with a self-directed, obviously the tax benefits. Everything you're doing is going to be tax deferred or tax free, right? So as you're in some of these real estate deals, man, you don't have to worry about capital gains. Most of the time, right, you're going to need in the cash flow because you're preparing for long-term retirement. So it's not like you're waiting on that mailbox money. It gives you a unique opportunity to be able to be cool with a longer hold time on your investments and really just take advantage of that compounding growth over time and reaping those tax rewards. Portfolio diversification. Again, a lot of the alternative assets, real estate stuff that's tied to really true, backed assets can decrease the volatility. We all know, there's so many political, things that can drive the stock market. The talks of war, the president, opens his mouth or says something, right? And we have volatility. You just don't see that as much with these types of investments. With your self-directed, you're kind of buffering yourself from all the outside noise, and your assets are tied to those real estate, type backing assets, and just provide you some of that benefit. So financial autonomy. Again, I like this one. It's kind of like invest in what you know best. So if you already have a passion, you're kind of already into real estate, do some real estate investing anyway with your cash. Why not think about, diversifying your retirement plan, getting out of the stock market and invest in stuff that you're comfortable with, that you are more knowledgeable on. How it works. So if you're interested, my team is more than happy to help. So takes 3 steps, right? Start to finish. You call us. We're going to need to open you an account. We're going to send you a DocuSign application. Complete that information. Takes about 15 minutes. Within a day or two, we're going to have your account opened up. Step 2 is going to be funding the account. So is that money coming from an old 401k that we're rolling over? Or is it transferring from another IRA or a Roth IRA from another institution? Me and my team can help you with that. It can be either a partial or a complete rollover. So I love to mention this because it's not all or nothing, right? Let's say you got $500,000 in your old 401k. Well, you might not want to roll it all over to the private side. You may want to say, hey, I just want to, dip my toe in with 100K or 200K. You can absolutely do that. Leave the rest in, kind of doing its thing on the public side, and just roll over a portion over to the private side and at least get in the game. So you have that option. third and final step, once your account's open, we have your money in there and you're funded, then you're just picking your investment. So if it's with somebody like Base Financial or some other private investment of your choice, basically you just kind of are advising us, on what you want to do. We'll help you process those investment documents, get it all structured up in the name of your IRA, and send the funds out for you, and your IRA will then hold that investment. So again, that was really quick. My team is always available. This is my contact information. Again, wanted to give most of the time to my guys at Base Financial because they have a really solid presentation and opportunity to talk to you guys about. But this is my information. Would love to have a conversation if you're interested, and learn a little bit more or want some more information. Reach out, and happy to connect with you and talk about what's going on with your personal situation. But without further ado, I want to go ahead and ask my friends Adrien and Terrell to jump back on here, and they will take it away and talk about their Legacy Loft student opportunity project. What's up, fellas? Good to have you on.
Hey, Chris, how you doing?
What's going on, Chris? How you doing, brother? Thanks for having me.
Good to see you guys. Thanks for being on, man. I feel like you guys have such a unique opportunity. The student housing is niche. I think our audience will really be excited to hear about it. So, man, you guys do your thing, and I'll circle back once you guys get done.
Absolutely.
All right, good stuff. All right, I'm gonna let Tara take it away. I'll go backstage until Tara's finished.
Perfect.
All right, guys. So there we go. So hi, guys. How's everybody doing today, man? My name is Terrell Bilbo. So just a little bit about me. I've been in the real estate space for the last 23 years. I am an alumni of Prairie View A&M, so you'll hear a lot about that. I think the passion for the school will come through the screen. You'll be able to recognize it, from the beginning. But this is my school. This is my alma mater, and this is why we doing it. But also, it turns into a passion project to understanding the overall market of what's happening across HBCUs and things like that, and just the market as a whole and what we can do to serve these underserved communities. And that's what it's really about. These students are going to school to get higher education. How can we put them in the best position possible? So that's what this project is about. You have your good feel to it, but it's also solid economics, solid investment returns. And that's what most people want to hear. If you can invest and have a solid, good feel story, that's even better. So that's what we're going to discuss here today. So go ahead, brother. So when we look at our executive summary, when you're talking about underserved communities, right? HBCUs at this point, if you're not familiar with that's the historically Black university and colleges, they're seeing record increases on enrollment. I think I'm gonna call it the Prime effect. When Coach Prime, Deion Sanders went back to Jackson State, a lot of our community saw the need or saw the advantages of going back to the schools, HBCUs, and now we've seen just a flood. I call it the mass exodus. A lot of people are coming back to the universities, but the thing that happens when we ask our kids to come back home to our schools, you got to have the facilities to house them. And that's what we've been seeing. The enrollment is up, but the bed count is staying super low. So when we look at the Legacy Lofts at Prairie View, which is our flagship project that we're doing out of the gate, you'll see when we get through the numbers, you'll see that, enrollment is up and they're continuing to grow, but they have a major issue is that these kids have nowhere to lay their head. And if this is not just an HBCU thing as well, like this is happening across the nation. So you'll see and understand that, student homelessness is a real thing. So like, again, this is purpose-built housing for students, but also a great investment for them as well. So when you look at why Prairie View, one, I'm going to say it first, because this is my alma mater, but more importantly, it's to be close to something, right? I actually lived this. I was a freshman at Prairie View A&M University in 1998, right? And I played ball, so a lot of my other friends didn't have housing, but I did because I was on the football team. So this problem has been going on for a while. So then when we look at this, what is it? It's simple supply and demand. Prairie View is sitting at 10,000 plus students at this particular time, and you're looking at about 5,000 beds. What does that mean? There's a huge gap of bedding and housing for these kids. So when we look at it, this is the opportunity. This is where the opportunity lies. And then, so when you look at the underserved market of this Prairie View as a whole, this is not the only school. We have plans to not only do Prairie View, but to do 30 other universities in the next 7 to 10 years. But we're starting here because this is our flagship. So we'll go through this and we'll show you how the gap is in the market and the evidence that's showing. So if you look right here on this chart, you will see that the enrollment at Prairie View continues to climb year after year, right? And a little insight on Prairie View that you should know, in the country, there's only one Carnegie One university, right? Prairie View is on the list to be the third, right? So they're vying for that Carnegie One status, a major research institution. So what does that mean? They're going for 12,000 to 15,000 students over the next 5 to 10 years. So again, they're going to continue to grow. Our job is to make sure that these kids have somewhere to play or somewhere to place their head at the end of the night. So again, it's just simple supply and demand, and at base, and with the Legacy Lofts at Prairie View, we look to fill that gap. So when you look at the positioning, right? So everything is headed toward Prairie View. If you're not familiar with Waller County is the fastest growing county in the country at this particular point. Right now, about 2 minutes away from our project, our 8 acres that we acquired, you're looking at a project called Beacon Hill. Beacon Hill is like an 800 development for homes out there. $500,000 homes, literally 5 minutes away from this major university. So the area is growing, right? You have all of this economic demand that's coming, $1.2 billion of statewide economic demand. You got Houston, which is one of the 5th largest cities in the country, and I believe we're growing by leaps and bounds because everybody's moving here, right? All of this is less than 50 miles outside of Prairie View. So there's a statistic that we just looked at. Most kids, universities, go to a university that's at least, in proximity to where they live, 50 miles or less. So Houston has also been stated as the largest growing demographic for kids 18 to 22 years old. So again, all the things are pointing towards this economic boom. And when we were having conversations with the city, it's really about how much of this economic boom are we prepared to take on and be prepared for. So that's what we're looking to do, to make sure that we're in front of the wave, not behind the wave. When we talk about real estate, it's always, comps. You got to look at your comps. If any of you guys are in real estate, you understand that. So you want to look at your comparable markets, what's going on in the space, and you'll see these are 3 housing developments that are in the space, right? All of them are 100% occupied. Again, there's not enough beds to go around in Prairie View, so all of these are 100% occupied. And again, but when you look at the quality, I think that's the biggest thing that we want to focus on, because when we started building these Prairie View, we thought about the quality of everything, right? We want to make sure that these kids are in a great environment, that they can come, they can lay their head, don't have to worry about any of the other distractions that come along with it. So when we look at what we're building compared to what's already there, we believe that we can dominate this market just based on the quality of amenities and everything that we're bringing to this market. But the great thing that it is, you look at this in all 3 of these units, all 3 of these properties, they have a master lease program with the university. And what does that do? That secures the long-term rental history or rental occupation of the actual property, right? So we're able to do that as well. So when you look at where we sit next to the university, right, you can literally sit on our 8-acre campus and you can see the property from our property, right? So it's less than 2 minutes down the road. So we're right there. So it's, again, location, right? And then when we look at the building strategy, right, we look at mass timber, what we're doing. So again, we talked about how Prairie View is growing by leaps and bounds. They have more students coming, they can't build the houses fast enough. So in that instance, what do you want to do? You want to have a product that you can bring to market faster. So that's, for us, we're looking at using mass timber. We have a 5-story building that's planned. That building can be up in 18 to 22 days. So that gives us the ability to come to market a lot faster. We're using modern technology. So all of these things are good when we look at it. And then the biggest thing, I think, especially for an investment standpoint, guys, you want to know who's building it, right? So that's very important. And then you want to know who's managing it, right? So all of our properties will be managed by Asset Living. So you guys Google it, do your research on Asset Living, but you will see that they're the number one asset management for student housing in the country. I think God has just been good for us because the team that we were able to put together to build this project, to manage this project, to use the materials for this project has been absolutely A1, and they're the best across the country. So we're very excited about that. And I think as an investor, that can give you a lot of comfort knowing that the team that's going to be managing your investment are very competent in the space. And look at it. Isn't she beautiful? Like, this is the proposed design for the Legacy Lofts at Prairie View. All campuses will be fitted with the school colors, because again, this is a rich history that you're stepping into. If anybody knows anything about HBCUs, we have rich cultures. Really, all universities do. But HBCUs is close to my heart because I'm a part of one. So we'll outfit each one of these with the school colors, the branding. It will still be Legacy Lofts. But this is what we're looking at now. I'll ask you guys out there, the people who are listening, if your child had the opportunity to live in something that looks like this, would you feel comfortable having your child living in an institution that looks like this, right? So that's what we're looking to do, man. It's all about the kids. It's all about giving them a safe place. And then even when we named it Legacy, because that's what these kids are going to do. They're going to school to become productive citizens and then leave a legacy at that school. So this is what it's really about, our impact that we'll have on these universities for years to come. So this is an aerial view of the actual layout. And we always have to give a great kudos to our architecture team. JMAC Architects did an amazing job pulling out the floor plan, utilizing that 8 acres that we had to the best of our abilities. I mean, guys, we engineered this thing down to the smallest piece to make sure that we were getting the highest and best use for this land. Again, that's another. So you'll see JMAC right there. Go ahead, brother. And then, so when we look at the unit mix, you're looking at, we have 4 unit mix. We'll have our efficiency, we'll have our singles, our doubles, and our quads, right? So this is all, and it all comes out to about 855 beds that we've assembled on this campus. So this, again, just giving you kind of the layout so you can see the privacy that these kids have, and just the amenities that they'll be able to enjoy while they're in the Legacy Lofts. And then again, amenities. One thing that we really love about the mass timber is the exposed wood and just the environment that these kids will be in. But we'll also have some retail in there as well, so they'll be able to get their matchas or their pizza or whatever at night, and then being able to go and work your body, doing things like that. So, and then study rooms, theater rooms, all of these different things they will be provided for. And then, if you just look at we looked at the unit mix again, we have efficiencies, ones, quads, and doubles, so you can fit every need and everybody will be able to feel comfortable and have a great college experience. And then the rent strategy, like you said, we looked at it from what's already happening in the community. So we already saw that these are numbers that are already there. So again, demand dictates the pricing. And because there's such a shortage, these are strong numbers. And I believe that we'll continue to increase at least a 3 to 5% increase over the next, year by year. So again, these are already solid where they are, but they will continue to increase over the years to come because the demand is continuing to grow there in Prairie View. And then again, we talked about the master lease program. Having that master lease program with the university really ensures that those dollars will come in. Typically, they guarantee up to 80% of that rental to any one structure. So that's a good thing. And then typically that timeline at a minimum is about 10 years, but can go all the way up to 30. So what that does for an investor, that just locks in your client for the next 10 to 20 to 30 years. So that's the kind of security that you want when you're making this type of investment. And then again, I told you guys about the all-star team. So you have us, you have Element 5, you have JMac, you have Asset Limit, and then you have Holton for our our civil engineer, and then you have Turner Construction. I mean, this is I call it the A team. If you guys ever watched that show back in the day, this is what it is. We've assembled the A team to make sure that this project is done right, is done on schedule, and is done on budget. That's what we've assembled here at Legacy Lofts. And from here, I'll let my brother take over from here, and he'll explain the financials and the offer that you guys have the ability to take advantage of.
All right, good stuff, Dr. Bilbo. Great job, man. Great job. All right, so good. From here, absolutely. All right, guys, how's everybody doing? I'm Adrien Sloan. I am the financial side of BASE. And BASE stands for Bilbo and Sloan Enterprise, right? For those who want to know, you see the baseball diamond. Our slogan is "You're safe with BASE." BASE is the owner of Legacy Loft. It's a offspring, an arm extension, if you will, of our company that specifically focuses on student dormitory. And when you look at the project itself with the Legacy Lofts, what you're talking about is a chain solution for student dormitories across the nation. Again, and when you research HBCUs, you'll find out it's 107 HBCUs across the nation, which is shortage around 1,500 to 2,000 beds on average. Even at your highest schools, at the top of the chart being Howard University, it's kind of like the grandfather and it's the golden land of all HBCUs. Even they have a shortage. So a school like Prairie View that's growing by leaps and bounds is one of many. Hence why out of 107, I target to do 30 over the next 7 to 10 years. And this need is there. So if you decide to become a partner of a expansion across the nation, not only are you filling a gap from an economic standpoint, what's needed financially across the market to be able to help these young adults to be able to get their education, you're filling that economic hole, as well as being a part of a chain that's a national brand at this point to be the solution of a national crisis of homelessness for students, right? So you have two sides to the coins. So when we look at each product that we bring to the market with the Legacy Lofts from a financial standpoint, let's dive into this. So this next couple of slides that you will see is going to talk about the numbers, right? Everybody want to know the numbers. So, and when you look at it, we look at a capital stack based upon, obviously, every HBCU typically sits in some level of opportunity zone. It sits in some level where federal funding is available. So these projects have a great opportunity to be able to be de-risked with tax abatements, 380s, 381s, agreements with the city and the county to be able to have large reimbursements and then locking in rates, right? Especially from a tax standpoint, because of the economic anchor and economic mobility that it brings to every city, right? That it brings more dollars outside just the tax base of what a large real estate project does. It also puts you in a situation where you're able to be able to lock in rates to be able to continue to grow in that market and keep those taxes at a minimum, right? And so de-risking the project is important. So when we look at doing a capital stack, we look at subsidies that's local, from the local standpoint, county standpoint, state and federal, to be able to, again, increase that IRR to the end user investor. So this particular capital stack, land acquisitions around $1 million, hard costs looking around 80 to 85, soft call 15 to 20, and having those reserve contingencies, right? So this project, you're looking at a nice solid capital stack where over 50% of that would be senior debt, right? So we have an OTC bond structure that's set together with a 2-year deferment on interest-only payments. So we look at that deal, you have an opportunity, 25% will always be equity, LP equity partners, hence why this great partnership with Inspira is so beautiful, because they have so many clients across the nation who's looking for deal structures to be able to put their money into good, safe investments, to be able to have great upside, locking in profits. You know, as Chris was talking about earlier, using the Self-Directed IRA is a beautiful program to be able to grow your capital, you know, year by year, compounding that interest on that deal and truly see some upside. So if you're listening or watching this video at this point, you have an opportunity to be a part of that 30 million that you can deploy into it. It's $100,000 minimum to be an invest inside this project. So we're allowing 30 million to come in from LP partners companies, and we'll talk about the IRRs in just a second. And that other 25% is what we was referring to from the de-risking. So when you look at local, state, and federal funding that's available, tax credits that we'll be able to get per the property, right, to liquidate, to put inside that deal. From an investment standpoint, you want that, right? You want that capital stack to be de-risked. And so there is a funding strategy for this particular project. If you decide to come on board, we'll show you at the end the deal room that you can click in free of charge, be able to, look at the PPMs and all the organizational structure that's inside the deal room. What our SEC syndication, this has a 506c syndication that's been done by our attorneys already, our SEC attorney. So you can feel safe and comfortable. Hence why Inspira was very, very comfortable to work with us, because we created a product that investors that can come into and grow. And you'll be able to see how that capital deployment year over year to be able to get a strong IRR on your funds. Every strategy with the Legacy Loft will be de-risked and have a capital structure where LP investment goes in, subsidies are deployed, and then on the back end, the debt service income is deployed, because we have a 2-year deferment. So this particular project would take about 15 to 18 months to be able to go to market, right? With groundbreaking being in January of this 2027, and then completion by June, July 2028. Ready for lease up, right, by August kickoff for the school year of 28. So you guys have a perfect opportunity and timing to be able to get in and lock in position to go for that ride. And so this school will already be in position for a year and about 4 or 5 months before the first interest only payment is already prepared. So that increases that NOI, right, to be able to have that operation capital. And you will see inside the hurdle how it's set up that all LP investors get their capital back 100% before any other distributions in the hurdle. 100% goes directly to the LP. So you get an opportunity to be able to regain that capital, right? Then you have that 8% pref, right, that gets, make sure you hit your 8% threshold, and then it goes into the hurdle where you'll see a 70-30. Again, you'll get a chance to regain it up to 15%, and then after that standpoint, it goes 30-70 up to 30% in that IRR over that 5 to 7 years. So really, really good hurdle structure to be able to secure the capital for every investor that comes in. So again, 8% pref, 18 to 22% IRR, right? And a target hold on that deal for 4 to 5 years, minimum investments being 100,000. And so when we look at the exit strategy to be able to get out of that deal 5 to 7 years for you to be able to gain a nice upside return of capital to your capital, and be able to take an upside in about 7 years. So risk mitigation, as we talked about earlier, a lot of things from infrastructure, right? We're talking about the different approvals. It'll be a PDD created for Prairie View through the city for this project. That gives us amazing opportunity and control to be able to build this 5-story structure. And again, be in a position for other expansions that we'll be doing that you'll hear about later inside the Prairie View market with that plan and development district. That gives us a lot of wiggle room and upside to keep building and keep force appreciating this particular asset. And so these numbers that we put out here is on the conservative side of what we're looking at, because we always want to under promise and over deliver. But even on the conservative side, at 18 to 22% IRR is beautiful in this market. So you got to ask yourself why. It's because we're talking student housing. When you look at the economy today, it's 2 areas that are very much prominent in the U.S. economy right now. The 2 fastest growing areas for a good investment in a multi-unit is student housing and senior living. Why? Because that silver tsunami of the baby boomers retiring, right? That money that's transferring, the largest wealth transfer that we've seen in our country, that we will see, right, is happening right now. So that's a big project. And student dormitories, because even in the recession, or even when we had COVID, we saw that universities kept growing, right? Kids still had tuition and go to school. Unlike the other markets, right, when you talk about multi-unit, if a person's job or economy is affected, then so is your investment. And this is why that market is not seeing such a great return. So we're in a great space right now when you look at the timing of this type of project for you to be able to invest into, in a market that's already proven itself, then in a downside turn of the market, it's still giving upside rate of returns. And so I believe that's a good space for you to be in, right? And so we have that security of capital, right? So when you look at the development timeframes, again, we're in that season right now where we're closing out the round for the LP investors to come in. Hence why Inspira brought this to your attention. And this is a great opportunity for you to jump on the flagship product of a brand that's sweeping the country right now, solving the niche and the need in the market, but also having a great return and protected in downside. So going to market right now, finalizing the capital raise, right? From this standpoint, from June to December, it'll be all soft costs and everything taken care of. Groundbreaking will be in January, and you're talking about development through 27, being ready by the summer 28, and being in position to lease up in 2028 in the fall. So when you ask yourself, like, wow, how can you guys do that, right? It's because when you look at the team, if you look at Mass Timber itself, when you Google and look up Element 5 and just put in Element 5 YMCA Canada, it's some amazing videos out there when they show time lapses of how Mass Timber is built inside a facility, what all the MEPs cut out when you talk about your HVAC systems, your electrical and so forth, so you don't have trays overstepping each other, and they put them together almost like Legos, right? Like big Lego blocks, right? But you're talking about real timber, but the architectural design is already built from an acoustic standpoint, a fire hazard standpoint, to be able to make sure fire resistance. And when you go into place, now the development team, Turner Construction, can just put it together. They can just assemble it. Now your trades come in and they button it all up. That's speed to market, right? And so we're able to do that to get the structure developed quickly because of the technology, right? It was some thought process looked into that speed to market, as well as now you have a 1.5-year runway with the #1 asset manager in the country with Asset Living running the marketing campaign to the students. So Legacy Loft will be the premier sponsor for the homecoming at Prairie View this year as well as next year. So our brand and partnership with the school is super excited to have a project there, open up the doors for us to come in. So now you're talking about marketing to the students ahead of time, waving the flag, letting them know that a solution is coming. So what does that do for your project? It gives you a waiting list, right, as you go through development for the next year. Does that make sense? So while we go through development for the next 1.5 years, the students are already being prepared, knowing that a solution is there. So from an investor standpoint, that gives you security, that knowing that this project will be leased up and ready to go. Now, when you look at the national average for Asset Living themselves, they have a 97% lease up ratio on average nationally. And that doesn't include markets like Prairie View and other HBCUs who already have a deficit of beds. And so we feel very, very confident that not only will we hit that national average, but we'll be able to supersede it, because in the market is already showing that a lot of properties are 100% leased up, right? And they still have a waiting list. So Mark Twain has a favorite quote that I love. It says, history doesn't repeat itself, but it rhymes. Right. And so when you look at the rhythm of this particular flow, I think we could see a strong upside. It is a great investment for all parties involved. Right. And so that investment roadmap, so when you look forward to this, you can review the opportunity, confirm the eligibility inside the portal. Right. Go ahead and go through your subscriptions. Right. Finalize your investment and then track your performance, guys, because everything is inside of your secure portal. So when you go into Invest Next and actually set that up, your secure portal is there for you. This is your privacy. This is your place where your dividends come to. You'll be able to track your project and see how everything is going and be able to receive your earnings, guys. And I really love how that's set up, right? And so when you look at, why the Legacy Lofts wins, I mean, it's a number of different reasons that this project will continue to be successful. But when you look at a clear demand gap, it is very, very clear that this is needed, right? Institutional housing needed. It is there. It's very clear, right, that this is something needed across the market, and professionally managed housing is very, very important, right? When you look at the updated program, right, the scale of this deal, you're talking about 325 units, 855 beds is what the update of this project went to. We actually grew it by a couple of more beds. The location, the professional execution, and the scalability, right? The brand itself is something that will continue to grow across the nation because it's needed, right? So here's a overshot for you real quick. You can scan that QR code right there and take you straight to the deal room. This is just a nice screenshot of everything that we've been able to go over with you this particular evening of what the returns look like. 8% rate of return, 18 to 22% IRR, stabilization in 4 to 5 years, has an exit strategy to be able to refinance and come out of that deal in 7 years, right? And you have a strong investment return and you're able to make impact. I want you guys to really take away with that. How do you feel investing into a project? Not only do you have above average market rate of returns for this style of investment, but you're making an impact, right, that you could be proud of, or something in your portfolio that's giving profits, but also making a difference, guys, is a great situation. So you can scan again that QR code to be able to invest inside this project and put yourself in position to be a part of something that absolutely will outlive all of our names, right? So when you say the Legacy Lofts, this is something that's a legacy project that all of us are proud of because of the impact that we're making. We definitely look forward to being able to work with everybody inside that deal. Once you come inside the deal room and we see you, we'll reach out to you directly, be able to have a conversation. If you're already in accredited investing and you have your documentation, you can upload that. If you need documentation, it is in the back office to be able to get your certificate, to be able to upload it. And we're here to assist in so many different ways, guys. So we want to leave you with that information. We appreciate you. The PPM and the private placement disclaimer has been seen here already, right? And so when you go inside the syndication, guys, you know you're inside of a place that you could be safe with base, and we could do some extravagant things together in the future. So we would like to thank Inspira for having us on, and we really hope this message means as much to you as it means to us, and we're looking for the right partners to be able to partner with to make a difference. So Chris, I'm gonna bring you back up. Thank you, brother, for giving us an opportunity to be able to share.
Man, woo! Absolutely. Thank you so much, man. Good information for those listening out there. I told you we had a good program for you today. And yeah, Sloan, Terrell, man, I just really appreciate you guys being on. Obviously I love it. It's simple supply and demand right at the root. Like it's a problem and you guys have a solution.
Absolutely.
And furthermore than that, you're making the social impact and creating, like you said, a legacy and investing into the community. So all around, just good stuff. It's been great. Any parting words from you guys? I know I feel like, man, we talked about self-directed and how people can diversify and use their money. Talked about your awesome project, but anything else before we wrap it up?
I mean, I just want to thank you again for sharing the space with us, man. This has been absolutely incredible. This actually started from a conversation me and my brother was having about mandatory distributions, and it kind of just got my mind spinning of like all of this money that's sitting on the sideline. These people are in these accounts, but do they really know what the penalties can be, or how to really move this amount around to really benefit them? So education is really a big thing for us. So in your opinion, what are some of, if you just had to leave one thing with the audience, like what are some of the misconceptions around, IRAs, self-directed IRAs, and investing and using that for like what we call a pension-like lifestyle? What are your thoughts on that?
Man, I think it goes back to the old, man, you don't know what you don't know, right? Like people just don't know that they can move that money. I think to your point, the biggest misconception is, man, I can't touch that money. It's just locked up till I'm, 65 or 70, right? And ready to cash out. That's not the case at all, right? Like you can move that money tax and penalty free, right? Because we're just moving money from the right pocket to the left, right? If you have an old 401k or an IRA, a Swap Fidelity Vanguard, you're just transferring it. You're not putting it in your bank account, right? And going and spending it. You're just moving it to another retirement account. Mm-hmm. And from there, you can invest. So, I think people get scared. That's probably the biggest question I get, right? It's like, well, man, am I going to have to take a tax hit if I take the money out? Well, no, because you're not taking the money out. You're just moving it from one IRA to another IRA. The difference is our IRA allows you to invest in private assets, alternative assets, and it really allows you to diversify. So that's the biggest stigma, I think, is people just think their money's locked up and they're going to have tax and penalty issues when that's not the case at all. So yeah. So that's the beauty of our job, right? Like one, connecting with individuals like you that are doing good things in the community and have some really cool opportunities, but it's also helping people, educate people on, man, it's your money and you're in charge of it, right? And there's some opportunities for you to really increase your wealth building, work towards your retirement, your legacy that you want to leave to your family and inheritance and so forth. So that's probably the biggest, the biggest upside to my job, right? Is just helping people, be able to utilize their money how they want to. So,
Absolutely. Well, Chris, again, man, we want to thank you, and I'll let my brother end it. But I want to keep you up to date when we have our next Dirt to Dollars workshop. Man, we got to have Inspire in the house to give some of this good information to our community. Definitely.
Absolutely, man. You guys shared your knowledge with us today. I'm happy to do the same for you guys. So, man, you just keep me posted on that. I'll be there.
Absolutely. And I don't have any questions. I just want to say thank you to Chris and his team, for putting this together, to the beautiful Inspire family across the country that's already trusted and inspired to be able to put your funds there, to be able to manage and to be that custodian for you, and just bringing forth an opportunity. I believe the company does an amazing job, looking for good talent. We just happen to be fortunate to be able to be found, right, to bring this opportunity to Inspire. When I look at a partner that I entrust and that I feel comfortable with, what our brand being in partnership with Inspire's integrity and how they handle business at a top-notch level in this industry is definitely one that we're grateful to be in partnership with. Because let's just face it, everybody in the space is not the same, right? And so when you look at companies' performance and how they handle business, Inspire is at the top of that food chain for us in the country. And so we just want to extend forth our gratitude and thank you for the team and Chris for having us. And we're looking forward to a very long-lasting and fruitful relationship to be able to help the Inspire community grow with the base community, and we create one big family reunion where we all enjoy and have a good time for all the things we've done. So I just want to say appreciate you.
Absolutely, man. Thank you guys. Appreciate y'all. And yeah, let's we'll be in touch. And again, thank you for being on too. Really appreciate you. Great content.
Absolutely. Thanks a
All
lot.
right.
Appreciate you.
Take care. Appreciate you.
All right. Take care.
All right.